AboitizPower has been driving change for a better world. It's been a long and challenging road, but with every step forward, we've made sure the businesses and communities we serve have been able to grow and flourish. We envision a world where vibrant communities have built their homes and businesses in a thriving environment. To make that world a reality, we are committed to serving the people by providing a reliable power supply at a reasonable and competitive price, while taking on the responsibility for the growth, wellness, and prosperity of the environment and the many communities that rely on us. Over the many decades we've been around, we've watched the world shift and change, and our success to this point has come in part from our constant desire to grow and innovate. The adoption of newer, more efficient, and more effective technologies in the name of progress is a part of who we are and why we're here to stay. Here at AboitizPower, we greatly respect the value and importance of the environment. Cleanergy, our brand for renewable energy sources, has become a significant part of our operations, and we continue to be on the lookout for opportunities in the renewable energy space while seeking ways to preserve and enrich the environment. We've long since recognized the incredible potential for kindness, compassion, and community in the millions of lives we've touched over our centuries-long journey. We take great pride in the care and service we provide to these people. To see their communities thriving is our greatest joy and success. AboitizPower, driving change for a better world.
Okay, good afternoon, everyone. Welcome to our analyst briefing. Today, we are going to report the financial and operating performance of AboitizPower. First, some house rules. Questions have been requested from our guests in advance, which we will answer during the Q&A portion of this event. We will also entertain live questions from the audience, if there are any. And finally, questions that we are not able to address during the Q&A session will be answered via email. This briefing will be recorded for documentation purposes and will be uploaded on our website after this event. By joining the session, you consent your voice, your name, and image being recorded for use and dissemination. If you do not consent to the foregoing, please do not join the session. So our program this afternoon will be as follows. To present to us today, we will have Mr. Manny Rubio, President and CEO of AboitizPower. At the end of the presentation, we will conduct a satisfaction survey and then proceed to our Q&A session, where we will be joined by AboitizPower's CFO, Sandra Aboitiz. Before I turn you over to Mr. Manny Rubio, we would like to begin our 2023 earnings briefing with a short video.
Okay, good afternoon, everyone. Thank you for coming. And welcome to the AboitizPower's full year analysts briefing. In 2023, we achieved record profits, maintained high plant availability, and solidified our market leadership in the retail electricity segment. But more importantly, we brought light to underserved communities and made a tangible difference, exemplifying our dedication to powering the nation's progress. And as we look ahead, decarbonization, digitalization, decentralization, and development are reshaping the domestic energy landscape. We recognize that we must navigate through these complexities while ensuring energy security, affordability, and sustainability for our fellow Filipinos. This requires a balanced approach and acknowledging the trade-offs inherent in these sometimes conflicting goals. Nevertheless, we leverage on our accelerating growth momentum and focus on our broader purpose of transforming energy for a better world. A long-term strategy includes adding 3.6 gigawatts of renewable energy to our portfolio by 2030. Our initial expansion phase focuses on developing solar and wind plants with a cumulative capacity of up to 1,200 megawatts. We are on track for 176 megawatts to come online by early 2024, with construction ongoing for additional 218 megawatts. The Kayanga Solar Project is a 94 megawatt peak solar power located in Barangay Kayanga, Municipality of Bogallon, Pangasinan. Kayanga was synchronized last October 2023 and is already providing power to the grid. The estimated commercial operations date is by the second quarter of 2024. The Lawag Solar Project is a 159 megawatts peak plant located in Barangay Lawag, Municipality of Aguilar, Pangasinan. The construction activities for the control buildings, substations, and transmission lines are ongoing, as well as testing and commissioning for the PV farm of phases 1 and 2. The project status is at 94% completion with zero lost time incidents. The first phase, which has a capacity of 72 megawatts peak, and the second phase, which has a capacity of 87 megawatts peak, are both expected to be energized by the second quarter of 2024. We call these solar plants as farmer-friendly plants, we have not displaced any farmlands in building these solar facilities. As you can see, I guess it's only AboitizPower would build solar plants in the mountainous region of Pangasinan. SNAP's 24 megawatt BESS project received its provisional authority to operate from the Energy Regulatory Commission on January 17, 2024. The project broke ground in April 2022, completed construction in July 2023, and concluded testing and commissioning with the grid operator in December 2023. It is used primarily for ancillary services in Luzon and started commercial operations in the reserve market on January 26, and it was inaugurated 2 days ago. The Magat BESS utilizes liquid-cooled lithium-ion batteries and is connected to the grid by a 230 kilovolt power transformer. It is co-located with SNAP's Magat hydroelectric power plant in Ramon, Isabela. In Tiwi, there is an initiative to convert waste heat from the geothermal brine, wastewater, to power a 17 megawatt binary power plant. Construction activities and site development works are ongoing. The project status was at 95% completion with zero lost time incident and is expected to be energized within the first half of 2024. More like April of next month for the energization. The second phase of our expansion will see the addition of around 1,700 megawatts of solar and wind power, bringing us closer to achieving our 3.6 gigawatt RE target. On top of our solar and wind energy pipeline, we disclosed on March 1, 2024, that AboitizPower, through its subsidiary Therma Nat Gas Power Inc., entered into an investment agreement with Meralco Power Gen Corporation and acquired 40% of Chromite Gas Holdings. Chromite Gas Holdings, in turn, plans to acquire a 67% interest in the 2 gas-fired power plants at the and an LNG import and regasification terminal, marking AboitizPower's foray into the LNG space. While we are not in the position to disclose further details on the transaction until we secure the necessary regulatory approvals to achieve financial close, this investment, along with our other proven green and brownfield projects, positions AboitizPower to sustain the group's upward earnings trajectory over the long term. I forgot to mention that there's also a land adjacent the facilities that will be included in the purchase, no? And that can house another 1,200 megawatts, potential 1,200 megawatts of expansion. Now let me share AboitizPower's half-year full results. So total energy sold by our generation and RES segments increased by 17% year-on-year, primarily due to fresh contributions from GN Power Dingginin and the higher availability of the plants across our portfolio and the growth in our retail trading sales volume. The 24% year-on-year decline in energy sold by our ancillary services or AS in 2023 was due to the delay in the implementation of the competitive selection process to sell ancillary services to NGCP. The availability factor across our portfolio has improved significantly and reached a 5-year high in 2023 as a result of the higher reliability of our plants and our effective risk management. Likewise, the capacity utilization of our generation segment in 2023 improved to 97% from 92% in 2022. This was due to the full year operations of GNPD, which started commercial operations in April 2022. Output from its Unit 2 was primarily sold to the spot market as originally planned in anticipation of high spot prices in the short to medium term. Our improved operational efficiency increased our gross margins on a peso basis by 16% year-on-year. The 14% increase in purchased power volume was the result of our trading and arbitrage strategy. Excluding the impact of our trading strategy, our purchased power volume actually decreased due to better plant availability. Similarly, for the fourth quarter in 2023, energy generated is 7% higher quarter-on-quarter, while our purchased power volume decreased by 3% quarter-on-quarter due to better plant availability. Gross profit is 9% lower quarter-on-quarter due to lower market rates, but this is nevertheless 13% higher compared to the same period last year. Our average margin rate in 2023 remained at par compared to the previous year, which is at 1.87 pesos per kilowatt hour, as the declining bilateral contract quantities and spot rates were offset by the steeper decline in fuel prices. The load-weighted average price or LWAP of 6.25 pesos per kilowatt hour for 2023 was 19% lower than the average LWAP of 7.72 pesos per kilowatt hour in 2022. This is driven primarily by significantly lower fuel indices, high availability of Ilihan, and the contribution of GNPD's full capacity to the grid. As you know, in 2022, Ilihan actually barely ran, and they started Ilihan only in the second half of 2023, which brought down Western prices. On January 26, 2024, the co-optimized energy and reserve market went live. This implies that power generation companies with generating capacity or units capable of providing ancillary services and certified by NGCP may now offer and sell ancillary services even without an ancillary service procurement agreement or ASPA. As a qualified ancillary service provider, this development bodes well for AboitizPower as it expands our target market, reinforcing our long-term growth story, plus will result to a more stable grid. For our distribution business group, beneficial power sales rose by 6% year-on-year due to recoveries in demand in the areas affected by Typhoon Odette and resurgence of energy sold back to pre-pandemic levels. For the full year 2023, beneficial power sales were already 5% ahead of pre-pandemic levels, specifically in 2019. So energy sales from residential, commercial, and industrial customers were up by 8% and 6% respectively due to previously mentioned drivers. This resulted to our beneficial EBITDA for the full year of 2023 rising by 16% to 64.6 billion pesos compared to the previous year. Full year contributions from Unit 2 of GNPD boosted beneficial EBITDA by 3.6 billion pesos, while the higher availability of both units produced an incremental EBITDA of 3.9 billion pesos in 2023. The beneficial EBITDA from our RES segment more than doubled to 2.8 billion pesos this year due to growth in retail volume shares and market share. As of the latest report from the Competitive Retail Electricity Market or CREM Bulletin, the Aboitis Group has the highest market share at 32% in terms of capacity allocation of RES, for RES, with over 500 retail customers. So for the fourth quarter, EBITDA was 13% lower than the previous quarter. This was due to lower availability of our coal facilities due to forced outage in GN Power Energy Center or GMEC and the plant outage in GNPD, which both occurred in December 2023. Nevertheless, EBITDA in the fourth quarter was flat year on year. The double-digit growth in beneficial EBITDA in 2023, along with lower interest expense for the year, drove AboitizPower's full-year core net income 29% higher to 33.1 billion pesos. The lower interest expense was due to the finance lease of our older coal plants, which has dropped significantly in 2023. So this translates to an ROE of 21%, a sustained improvement from 2022's 19%. Our balance sheet continues to be strong. The 16% decrease in our outstanding cash balance was due to the share buyback program last September to October, amounting to 5 billion pesos and dividend distributions amounting to 13.8 billion pesos in 2023. Total interest-bearing debt declined by 5% to 237.1 billion pesos due to lower financial lease liabilities, and as a result, our net debt to equity improved from 1x to 0.9x. For 2024, we, together with our partners, have allocated 73 billion pesos in capital expenditures. This is more than double the 26 billion we spent in 2023. 72% of our total capex budget for this year is earmarked for renewable energy pipeline, while the remaining budget is for continuous improvement of the reliability of our baseload plants, as well as various land acquisitions, new substations, new meters for our distribution business. This figure does not include our investment in chromite gas. And now to our dividends. On March 5, 2024, AP approved regular cash dividends in the amount of 2 pesos and 30 centavos per share to all stockholders as of March 19, 2024. This is the highest dividend per share that we have paid out in the company's entire history. This is payable on March 26, 2024. The total dividends payable for this year amounts to 16.6 billion pesos, which is equivalent to and consistent with our practice of paying 1/2 of the company's previous year's net income. Based on the closing price of 37.8 on the day our dividend was announced, this also translated to a dividend yield of 6.1%. In conclusion, AboitizPower is doing well, but our focus is bigger than profits. We will continue to bring light to underserved communities and remain dedicated to a balanced approach to energy. We have a clear plan to transform energy for a better world, and we are realizing our purpose by addressing the 4D framework and making great progress in our initiatives. Our partnership helps us achieve our goals. We strive for sustainable growth, and collaboration fuels progress. And finally, I'd like to end my presentation by providing some updates on our sustainability journey. Building a sustainable future for the Philippines requires a multi-pronged approach. While ensuring a reliable and balanced mixed energy through strategic investments, we remain steadfast in our commitment to sustainability and strong corporate governance. We at AboitizPower are proud to be recognized as a top-ranked Filipino electric utility company in S&P's Corporate Sustainability Assessment and Sustainalytics. And we are also consistent recipient of the Golden Arrow Award from the Institute of Corporate Directors for Excellence in Corporate Governance. We remain resolute in balancing our growth aspirations with environmental responsibility and ethical practices. Thank you, and we now open the floor for questions. Can I invite Sandro to join me on stage? Oh, okay.
Okay, so while we set up for Q&A, we would like to request our audience to complete a satisfaction survey, which you may address 3 ways. You may scan the QR code on the screen. You may also scan the QR code labeled AboitizPower on the survey forms on your table, or you may manually complete the printed survey forms on your tables, which we will collect after the event. Okay, thank you for answering our survey. So now on to Q&A. Before we go to the questions we received in advance, I would like to check if any of our participants here or on Zoom would like to ask a question. So kindly raise your hand or click on the raise hand button so we may acknowledge you. Before you ask your question, could we ask you to also state your name and institution and the name of the person you would like to address in your question? Okay.
Hi, I'm Greg from BDO. I just have 2 questions. First is on the spot prices. Given the improved grid conditions, do you see spot prices, I guess, trending lower this year? And then how would that relate to your expiring retail sales contracts or energy-based contracts? I think before you mentioned like a third of the energy-based contracts usually expire in a year. So I just wanted to know if that would impact your repricing, I guess, this year. And then second is on the dividend payouts, given that CapEx, I guess, more than doubles. Do we expect, I guess, a lower dividend payout moving forward, given your intensive expansion for generation? Thanks.
Yeah, on the first question in terms of spot prices, I think overall the expectation is that spot prices will come a little bit down. And obviously that's because there's new capacity on the grid, right? So Ilihan is running at closer to full capacity. There are more RE projects being committed to be delivered this year. So supply is increasing. Fuel prices are also down further this year, right? So last year they came down from 2022, and expectation is that they'll continue to come down this year. Having said that, I think overall spot prices are still higher than they historically have been before the fuel markets went haywire. And then in terms of how it affects our RES contracts, so we do have quite a bit of churn in our portfolio, but fuel costs are also coming down, right? So our expectation is that we can maintain the margins in those contracts despite costs coming down, despite selling prices coming down. We're also seeing, I think, a greater willingness on the customer side to go a little bit longer than normal. So historically, where you get 1 to 2 year contracts, some are willing to go a little bit longer and willing to pay a little bit more for the certainty of being able to go a little bit longer with a fixed rate. So we're going to try and hold the line in terms of our margins there.
I'll add, well, Sandro already talked about the energy spot market. No? In January 26, 2024, the spot market for ancillary services also started, and GCP is now required to actually buy what's in the grid code, right? And then they cannot just cherry pick on who to buy from outside of their contracts, because they also contract us. Some of our plants are contracted, no? So we're seeing prices in the ancillary market to be high at the moment, which actually reflects a shortage of reserves, no? Which we all know, like the incident in Panay. So now that they have to buy these capacities, I think we're seeing the grid to be more stable. But the higher prices in the ancillary services market is a signal to actually invest in reserve capacities, and that's an opportunity for generators, no, to take signal from.
Sorry, the question on the dividend payouts, the answer is no. So there's no expectation that the dividend payout will change based on our existing plan.
Did we answer your question? Good. Okay. So maybe we'll shift back to the questions that were sent in. So the first question is still on the spot market. Wholesale electricity spot market prices declined by double digits in 2023. How much was attributable to declining input costs like coal, oil, nat gas, and how much was due to additional capacity meeting increased demand?
Yeah, I don't know what the breakdown is, but the drop in price were mainly because of those two things. So as Manny mentioned earlier, Ilihan, which had not run at all in 2022, started running last year. GNPD2 started running last year. And then fuel costs came back to earth after being extraordinarily high in 2022. So those were the two primary drivers.
Yeah, and last year, Ilihan probably averaged at an output of around 400 to 600 megawatts. They're running 900 now. They got tested to 1,200 yesterday. So I think that that would have an impact on the spot market, for energy spot market moving forward.
Thank you for that. I think we have a question from the floor. Jeline, you were raising your hand.
Yeah. Hello, good afternoon, everyone. Jeline Gaza from JP Morgan. I have several sets of questions. First relates to the LNG deal. Can you run us through the rationale for this investment? How do you expect earnings impact to be for this year if it closes by mid-year or coming into next year? And how will this impact your LNG relationship with your strategic investor, JERA, if any? So that's the first set.
Investing in LNG, LNG being a transition fuel, and as we actually shift towards cleaner technologies, no, is a strategy for us. It's a step in the right direction, no? And this deal provided the opportunity for AboitizPower to enter the LNG space, no? Although we are also looking at developing a portion of the Pagbilao land, no? Even while we were discussing this transaction of developing 1,200 megawatts of LNG in Pagbilao. But at the end of the day, I think the country only needs one terminal, and another terminal won't be competitive. And as we actually expand baseload capacities using LNG, I don't think everyone should be building terminals, no? So I think this is a very good opportunity for us. As you know, Ilihan won the bid to supply 1,200 megawatts from a CSP in Meralco, which is up for approval by ERC, and then Excellent, which is being constructed and expecting to be delivered by 2024. We'll start in the contract also delivering LNG to power capacity to Meralco, 1,200 megawatts by December 2024. Again, once approved by ERC. With regard to earnings, until we get ERC approval and have an idea of what ERC will do with the pricing, I think difficult to comment on that one.
Thank you for that, sir. Second question is on the hydro generation for this year. There's still an ongoing El Nino. How do you expect volume trend for the first half? And if there will be a La Nina going into the second half of this year, how will that impact as well? Yeah.
The good thing is that La Nina is expected towards the second half of the year. We started actually, 2023 is the first year of Magat operations since we took over that we didn't spill during the rainy season. No? And we started the year at the lowest level of Magat since we took over. Fortunately, ancillary services market opened and we're offering contingency reserves. And the capacity that Magat can produce for contingency is actually being offered in the spot market, and that's the alternative for energy. For those of you who have been monitoring Snap's performance, no, which have been a provider, consistent provider of ancillary services, they're back, no, again providing ancillary services, and this time contingency reserves. So that took the place or a replacement for energy, and actually doing well given the prices in the co-optimized market.
Sorry, sir. Can you elaborate on the changes in the ancillary rates, if any, compared to the old regime to the new one?
Yeah, before for you to service ancillary services, to provide ancillary services, you enter into a contract with NGCP. No, recently they converted this negotiations into CSPs. No, but then as part of IPIRA and a part of the Western protocols. Co-optimized market should actually also be in effect, no? And so now generators like us should offer both, if we are qualified to provide ancillary services, capacity for energy and capacity for ancillary services. And then depending on where you want to play, that should be reflected in your offer prices. Recently, what's showing, especially in Visayas, is a shortage of contingency reserves. Prices are quite high in certain days, in certain hours of the day, above 20 pesos per kilowatt hour. No? And I think you'll see that being reflected in the transmission cost for February. But what that means is that we are actually now having a more stable grid. There's actually full reserves being bought by NGCP, although reserves from expensive technologies like diesel units. So our plants like Magat is a price taker based on a price being offered by diesel units offering contingency reserve at those prices. I'm willing to give you more details during the cocktails later on. So if you want to know more about the ancillary services market.
Thank you, sir.
Okay. So while we're in the topic of hydro plants, there are a few questions from Macquarie and Papa Securities on that as well. So the first one is, how much energy was produced or sold, including year-on-year change by the hydro plants in fourth quarter 2023 and full year 2023? And how much were the earnings of the hydro plants in 4Q and full year 2023?
We look for the details, huh?
Yes. So if you look at the fourth quarter 2023 against the same period last year, large hydro and run-of-river plants energy sold and EBITDA decreased by 5% and 27% respectively. When you compare the full year 2023 against the same period last year, the large hydro and run-of-river plants energy sold and EBITDA decreased by 17% and 9% respectively. So that decline, again, as Manny mentioned, was mainly attributable to the delay in the ASPA CSPs, which had been planned by NGCP. So the expectation was that they would conduct the CSPs beginning of the year. They ended up happening closer to the end of the year. And lower water inflow was also a cause of that.
Okay, thank you. And then the second question on hydros will be, how are the water levels of AP's hydro plants? What is your outlook on the performance of AP's hydro plants given El Nino?
Yeah, I think I answered that. Well, it's lowest that we've seen at the start of the year, but with the co-optimized market, I don't think the level actually will affect the earnings of our hydro facilities because it's offering reserves, particularly contingency reserves in the co-optimized market.
Okay, thank you so much. Okay, so getting back on track, there are questions on the generation portfolio as well. So the question is from Cole. What is Call Financial, sorry. So what is the contracted level of AP's power generation portfolio?
At the end of 2023, the Gen portfolio was about 89% contracted, right? So the balance was sold to the spot market. I guess in 2024, we're not expecting that to be too different, but given that contracts do churn on a regular basis, and given the sizable rest position we have, I think we can fairly easily adjust based on what we're seeing in the market because of that sales capacity we've built in the rest business.
Okay, thank you for that. Next question is more on the EBITDA margins. So EBITDA per kilowatt hour margin in 4Q 2023 was down quarter on quarter. Is your margin per kilowatt hour defensible from here given lower spot price environment? How have you changed your coal hedging policy amidst recent commodity price action?
Yeah, I think the main reason why it was down the fourth quarter is because in general, spot prices tend to be lower in the fourth quarter versus the rest of the year, right? So that was definitely one driver. But I think two things. One, we're consistently trying to find ways to bring our fuel costs down, working directly with our fuel suppliers, renegotiating contracts where we need to manage our fuel cost. And then I think again, back to the retail side, given that it's such a large component of a sales channel for us, we're actually seeing margins increase. And I think this again goes back to the willingness of customers to pay a premium for fixed price products, given the uncertainty in the market. So those two things, I think, give us the confidence that despite selling prices themselves coming down, again, we're able to maintain our margins, right? On the hedging side, our policy has always been the same. We use hedges to cover our fixed price contract risk. I guess what's changed is that given the volatility in the market, we have to be maybe more active and ensure that our hedging program is robust enough so that we're able to minimize that risk and still be responsive to the needs of our customers. We're also now evaluating more physical hedges outside of the financial market, where we hedge directly with our coal suppliers on a physical basis to the extent that they're willing to do that, right?
Thank you. So the next sets of questions will be more on the recent acquisition, the recent investments that we did. But before I go to that, can I just check the audience if there are any questions here? Oh, okay. Go ahead.
Hi, good afternoon. Eunice the latter from Security Bank. Just a few questions, mainly on the DUs. Given there's the indications of La Nina, how do you see the demand changing from the first half and on the full year of 2024? If you can share already your volume growth tracking for the first 2 months of the year also. Thank you.
For the distribution utility, I think it will reflect economic growth, particularly in our franchise area of the major ones in Cebu and Davao. Expect around 6 to 6.6% growth in demand. As I reported, we're already higher than pre-pandemic levels in 2019. Yeah, so I think it's just going to be a steady growth for our DUs outside of any plans to actually expand the DU business.
Another question on just a guidance on GNPD. How much have you recognized for the fourth quarter and full year of 2023? And how do you see this trending for this year? Thank you.
Sorry, when you say recognize, do you mean income?
Income, yes.
Hang on, let me just check. In Q4 2023, the beneficial share of GN's EBITDA was 2.9 billion. And then for the full year, beneficial EBITDA was 17 billion for GN.
Are you okay? Have you answered your question? Okay, thank you so much. Okay, so the next, as I mentioned, the next set of questions would be on the recent announcement of our investments in Chromite. So the first question is, what does the financing structure look like for Aboitis' portion of the 3.3 billion cost? What portion of it will be funded by debt and what will be from internally generated cash? And will the company raise equity and debt for this acquisition?
Yeah, so I think we're planning to fund the acquisition with a combination of cash and debt. And we're not planning to raise any equity for this acquisition.
Okay, that's clear. Thank you. The next question is, can you confirm that both LNG units are contracted out to Meralco on 15-year terms per news reports? And what is the percentage of capacity? What percentage of capacity is secured by long-term or bilateral contracts with pass-through?
Yeah, based on the TOR and what was offered in the CSP, 1,200 megawatts for Ilian and 1,200 megawatts for Excellent Energy are contracted for 15 years. Next question is capacity. Well, the full capacity has been contracted to Meralco. And Meralco will be the one nominating the capacities in the spot market when delivery actually happens.
Okay, thank you. The next, I think you answered this question already during the presentation, but might as well just reiterate for some of our audiences. Do the existing facilities have potential for adjacent expansion, and to what extent?
Yeah, Excellent has got 3 units at the moment at 400, if I'm not mistaken, 420 megawatts each. There's a provision for a 4th unit, so that's another 400. And then an adjacent lot has space for another 1,200 megawatts. So all in all, I think within the Ilihan facility of that area would can accommodate another 1,600 megawatts of LNG capacity, LNG to power capacity.
Thank you for that. The next question is what is the expected timeline for the completion of this deal?
We're expecting two things will drive the financial close: ERC approval and PCC approval.
Okay. So moving on to another favorite question for Aboitis Power is on the treasury shares. What is management's intention for the shares held in treasury?
So I guess make it clear that there's no intent to cancel the shares. That was a question that was asked. We're keeping the shares in treasury as an option to raise capital later on, but any decision we make has to be evaluated alongside other options we have to raise capital, whether through the debt market or from some other means, right? The price has to be right in the market, and we have to evaluate it against other options we have at the time.
Okay.
I hope that answers the question.
Good. Thank you. Moving on to the coal plants. So this was touched upon earlier already, but the question is on GNPD. In which quarter did GNPD start utilizing the income tax holiday?
Oh, we started in Jan 2022 when the certificate of commercial operations was issued to us.
Thank you. And then what is the contracted level for GNPD?
No, it was in 2023, I think the average was about 70%, somewhere in that range. Although if you recall, GN, through a recent CSP with Meralco, won a long-term contract for 300 megawatts. That contract, I think, starts delivery in 2025, Jan 2025, March 2025. And then GN also has a fairly sizable share of capacity that's been sold to the retail market as well.
And then last question on GNPD. When do you expect to start interest and depreciation expense recognition? What needs to happen before the actual acceptance of the plan from EPC contractor, and any guidance on the timing?
So the management team continues to assess the technical and physical performance of the plant. So once we'll trigger depreciation once we feel comfortable that it's met those hurdles. Based on the latest reliability performance of GN, our expectation is that sometime in the second quarter, we'll start recognizing depreciation and interest.
Okay, thank you. So shifting gears to the renewable energy part of the business, the question is, has the company considered spinning off the RE business into its own listing?
We've been looking at a number of options, no, on how to raise capital. Well, that should be the reason, no? But at the moment, I think we're good with the way we're structured. What we want to do really is to build our pipeline, make a strong, develop a strong pipeline of new capacities, and achieve our 3,600 megawatts of new capacity by 2030. No, that's the driver at the moment. We don't want to divert from that and then lose focus on what we need to deliver by 2030.
Okay, we have room for one more question. So just want to check if there's anybody who want to ask a question from the audience. Greg?
I just wanted to clarify on the chromite valuation. The $3.3 billion is enterprise value ba or equity value?
Enterprise.
Enterprise, yeah. Thanks.
Okay, so that with that, we would like to end our Q&A portion. Thank you so much, Manny and Sandro. For the benefit of those who missed part of the session or would like to re-watch the briefing, a video of this recording will be available at our website after this event. So thank you again. You may now rejoin our audiences. We will take a 5-minute break before we proceed with the 2023 earnings of Aboitis Equity Ventures. For those of us joining virtually for the AEV briefing, please take this time to redial into the AEV specific Zoom link. Thank you.